What if a handful of companies could send you cash regularly? Not once, but every quarter. That's the power of dividend income. Today we are counting down the top 10 dividend stocks for passive income in 2025, complete with real yields, the latest dividend amounts, and what you need to watch out for. Dividends are simply a portion of a company's cash profits returned directly to its shareholders. For income investors, the goal is to find a balance of three key things: a solid yield today, a history of dividend growth over time, and safety, which we measure by looking at the payout ratio and the stability of the company's cash flow. For this list, I'll give you the company, its recent dividend payment or yield as reported in late September 2025, its dividend streak or a key growth signal, plus a short risk note to keep in mind. Now, let's get into the top 10 dividend stocks for 2025. Coming in at number 10 is AT&T. Ticker symbol T. AT&T is a classic high-yield play in the telecom sector, generating steady cash from its massive wireless and media assets. As of late September 2025, it pays a quarterly dividend of $0.2775 per share, which gives it a yield of roughly 3.9%. The primary risk with AT&T is the intense competition in the wireless space. Heavy spending on device promotions and pressure on monthly plan prices can squeeze its free cash flow, which is the very source of that dividend. At number 9, we have its direct competitor, Verizon, ticker VZ. Verizon is another telecom giant known for its large, stable cash flows, and its board has shown a continued commitment to shareholder returns. In a recent move in September 2025, the board increased the quarterly payout to 69 cents per share. Depending on the stock price, this pushes Verizon's yield into the attractive mid-single-digit range. However, just like AT&T, its biggest risks are fierce wireless competition and the constant, high capital expenditures required to upgrade and maintain its nationwide network. Next up, at number 8, is PepsiCo, ticker PEP. PepsiCo's strength lies in its diversification. It's not just a beverage company. Its massive snacks division, led by Frito-Lay, provides a second, powerful stream of cash flow. This has fueled a long history of dividend increases. As of late September 2025, its quarterly dividend was reported at around $1.4225 per share for a yield of about 4%, and the company boasts over 50 consecutive years of dividend increases. The risk to watch here is volume sensitivity in its snacks division. Keep an eye on the North America Frito-Lay sales trends, as occasional earnings misses have been tied to weakness there. Sliding into the number 7 spot is the iconic Coca-Cola, ticker KO. Coke is a classic defensive consumer brand with immense global recognition and significant pricing power, allowing it to pass on costs to consumers and protect its margins. In 2025, the company marked its 63rd consecutive annual dividend increase, a testament to its resilience. Its forward yield hovered around 3% through September 2025. The main risk for a mature company like Coca-Cola is slower top-line growth, especially in developed markets. Future growth will heavily rely on continued pricing power and selling a more profitable mix of products. At number 6, we have the healthcare and consumer giant, Johnson & Johnson, ticker Johnson & Johnson. J&J's power comes from its diversified business model spanning pharmaceuticals, medtech, and consumer health products, which provides a very stable foundation for its dividend. In 2025, the company reported its 63rd year of consecutive dividend increases, with its latest quarterly payout rising to $1.30 per share. This gives it a yield of approximately 2.9% as of late September. The key risk for investors to monitor remains legacy litigation. While the company has been working to resolve major legal cases, developments in this area can still impact near-term market sentiment. Entering the top 5 is Procter & Gamble, ticker PG. As a leader in recession-resistant consumer staples like Tide detergent and Crest toothpaste, P&G has a strong margin profile and decades of dividend raises under its belt. Its brands are household names that people buy in good times and bad. As of September 2025, its forward yield was in the 2.7% to 2.8% range, supported by a regular quarterly payout that was reaffirmed by the board in July. The biggest risk for P&G is margin pressure from rising input costs and intense competition in the retail channels where its products are sold. At number 4 is the global fast food king, McDonald's, ticker MCD. The beauty of McDonald's is its franchise-heavy business model, which produces incredibly reliable and predictable free cash flow. This cash flow machine is what fuels its steady dividend growth year after year. As of mid-September 2025, its quarterly dividend stood at around $1.77 per share, translating to a yield of about 2.3%. The risks for McDonald's are tied to the broader economy, including potential dips in consumer spending during a slowdown and currency fluctuations from its vast global operations. Cracking the top 3 is the energy powerhouse Chevron, ticker Chevron. Chevron is known for its strong commitment to shareholder returns, including a long streak of dividend increases that is impressive for an energy major. Through mid to late 2025, its dividend yield was reported in the mid-4% range, somewhere between 4.4% and 4.9%, with an annualized dividend of around $6.84 per share. The main risk here is inherent to the energy sector. Cyclical refining margins and direct exposure to crude oil price swings can cause volatility in earnings. At times, its payout ratio may become elevated if cash flows dip. Our runner-up at number 2 is ExxonMobil, ticker ExxonMobil. As one of the world's largest oil and gas cash engines, ExxonMobil combines its dividend with large-scale share buybacks to deliver substantial shareholder returns. Dividend data sources noted the company hit 43 consecutive years of dividend increases in 2025. Its annual dividend was reported at around $3.96 per share, giving it a yield in the 3.5% to 3.6% range as of late September. Like Chevron, its primary risk is commodity price sensitivity. The cyclical nature of oil and gas earnings means the stock price and dividend yield can be variable. And finally, our number 1 dividend stock for 2025 is Microsoft, ticker Microsoft. Microsoft takes the top spot because it represents the perfect blend of income and growth. It combines a modest but rapidly growing dividend with enormous cash generation from its cloud and software businesses, all while maintaining a very low and safe payout ratio. While its forward dividend yield is small at around 0.7%, the growth is what matters. The board approved another significant dividend increase in 2025, bringing the quarterly payout to approximately 91 cents per share. The key risk here is that it is not a stock for those seeking high income today. Microsoft is a dividend growth story, designed for long-term compounding and total return. So, let's quickly summarize the key takeaways from our 2025 list. The energy majors, Chevron and ExxonMobil, often deliver the highest immediate yields, but they come with cyclical risk tied to commodity prices. Telecoms like AT&T and Verizon also offer higher starting yields but face significant competitive and margin risks. On the other hand, consumer staples and healthcare companies, Coca-Cola, P&G, Johnson & Johnson, PepsiCo, and McDonald's, provide lower initial yields but offer incredible stability and decades-long track records of dividend increases. Finally, a big tech titan like Microsoft offers the lowest yield today but provides unmatched dividend growth and balance sheet safety, making it a fantastic choice for long-term compounding. When looking at this data, it's helpful to see it all in one place. On screen, you might see a table with columns for the ticker, company name, latest quarterly dividend, the yield as of late September 2025, and the dividend streak. You could even add short risk badges to each one, like cyclical, margin risk, litigation, or low yield. And always remember, these numbers change daily with the stock price, so it's crucial to show live price captions or a timestamp like yields as of September 30th, 2025 to provide context. Dividend investing isn't about getting rich overnight. It is about building a long-term stream of passive income and letting the power of compounding work for you. Whether you choose to reinvest those dividends or collect the cash, these 10 stocks have proven they have the potential to deliver for investors in 2025 and beyond. Which of these companies would you add to a passive income portfolio? Drop your top pick and your reason why in the comments below. If enough people are interested, I'll create a downloadable chart with all these yields, payout ratios, and a research checklist you can use. As always, this is not financial advice, so be sure to do your own research.